Hello and welcome. Today, we're cracking open an essential toolkit for any manager who's serious about boosting profitability. We're talking about cost accounting. But listen, this isn't some dusty chore for the finance department. We're going to treat it as a set of powerful, practical tools you can use to make smarter decisions right on the ground every single day. So let's get that toolkit open and see how you can put it to work. So, does this question hit a little close to home? It's a huge pain point for so many businesses, right? You feel like you're going full throttle, but the profit and loss statement just isn't showing the results. Well, cost accounting is specifically designed to find those cracks. It helps you figure out where your money should be going so you can spot those little inefficiencies before they turn into a major drain on your bottom line. Okay, first things first. Let's get a crucial distinction out of the way. You've probably heard of financial accounting. That's the stuff for outsiders, investors, banks, you name it. It has to follow super strict rules like GAAP, and it only looks backwards at what already happened. But cost accounting? That's your secret weapon. It's your internal playbook. It's flexible, it's forward-looking, and you can tailor it to give you the exact information you need to run your operations better. So, here's our game plan for today. We'll start by really digging into this idea of a financial toolkit. Then, we'll cover the most important first step, getting your costs sorted out. After that, we'll look at two really precise tools, standard and marginal costing. We'll even figure out how to pick the right method depending on what your business actually does. And finally, we'll take a peek at how new tech is giving this whole toolkit a major upgrade.
Right, let's really establish this financial toolkit idea. Think of it this way. Financial accounting gives you a report card on how you did last semester. That's nice, I guess. But this toolkit, it gives you the wrenches, the drills, the power tools you need to actually build a more profitable future. It's all about getting out of a reactive mindset and starting to make proactive, data-driven decisions that really move the needle.
So, before you can use any tool, what do you have to do? You've got to organize your materials, right? You need to know what you're working with. In business, that means getting a handle on your costs. And this isn't just about simple bookkeeping. This is about understanding the fundamental behavior of your expenses because that is the absolute key to unlocking smarter, strategic decisions down the line.
Now, this table here is the bedrock of cost accounting. You have variable costs. Think raw materials. The more you make, the more the total cost goes up, but the cost for each individual item stays the same. Then you've got fixed costs, like your monthly rent. That total stays constant no matter what, which means, and this is cool, the cost per unit actually goes down the more you produce. And of course, in the real world, you get a lot of mixed costs. Think of a utility bill, a fixed monthly fee, plus a charge for how much you actually use. Nailing down the difference between these is absolutely foundational for everything else we're going to talk about.
Okay, now that we've got our materials sorted, let's get to the really cool stuff, the precision instruments in our toolbox. We're going to compare two of the most powerful methods in cost accounting, standard costing and marginal costing. And look, these are not interchangeable. They are very distinct tools designed for completely different but equally critical jobs a manager has to do.
So what is standard costing? The best way to think about it is like creating a financial blueprint for your product. Before you even begin, you create a target, a standard cost for materials, for labor, for everything. It's your benchmark. So this isn't just about adding up receipts at the end of the month. It's about measuring your actual performance against what you should have spent according to the plan.
And this process here is where the magic really happens. It's a cycle, a continuous improvement loop. First, you set those standards, your blueprint. Then you record your actual costs. Third, and this is crucial, you track the variances. That's just the fancy word for the differences between your plan and reality. And fourth, the most important step of all, you take action. If your materials cost way more than the standard, that's your signal to go talk to your supplier or find out if there's waste on the factory floor. Then you adjust, and the whole cycle starts again.
All right, let's switch gears to our next tool, marginal costing. If standard costing is about control and planning, marginal costing is all about speed and agility. It answers one simple but incredibly powerful question. What's the true cost to produce just one more widget? By focusing only on the variable costs, it helps you make those fast, on-the-spot decisions. Like, should you take on that huge last-minute order, even at a discount? Marginal costing gives you the data to say yes or no with confidence. So, let's just put it all together. Standard costing is your tool for long-term control and efficiency. It looks at the whole picture, fixed and variable costs. Marginal costing, on the other hand, is your go-to for short-term profit planning and those quick decisions. It only cares about the variable costs. They aren't rivals, they're partners. Two different tools for two different jobs in your toolkit. Now, the tools we've talked about aren't one size fits all. The right tool always depends on what you're actually building. So, are you crafting unique, custom jobs for each client, or are you in the business of churning out thousands of identical items? Your answer to that question will determine which of the next two tools you need to grab.
This slide lays it out perfectly. If every single thing you sell is different, you're going to use job order costing. It lets you track all the specific costs for each individual job. But if you're making thousands of the exact same thing, trying to track each one would be a nightmare, right? That's where process costing comes in. You just average out the total costs across all the units you made in a given time period.
So when would you actually use job order costing? Well, think about a shop making custom furniture. Every table is unique. Or a construction company building a house. Heck, even a law firm uses it. Every case has its own set of billable hours and specific expenses. In all these cases, you absolutely need to know the profitability of each specific job.
And on the flip side, you've got process costing. This is for the world of high-volume, uniform products. We're talking about a factory pumping out packaged snacks, a chemical plant, or a huge bakery that makes thousands of loaves of bread a day. Here, you're not worried about the cost of one specific bag of chips, but the average cost to produce a bag during Tuesday's morning shift. So, we have our core set of tools. We know how to sort our costs, and we know which methods to use for which job. But just like any good toolkit, this one is getting a massive technological upgrade. Let's take a quick look at how modern systems are making all these costing methods way more powerful and way easier for managers to use.
You know, what used to be a frantic month-end reporting scramble is now happening live, in real time. Modern systems, often called ERPs or Enterprise Resource Planning Systems, plug cost accounting right into your daily workflow. This means you can see a budget variance the second it happens. It completely transforms costing from a backwards-looking report into a proactive, everyday management tool. And the future's even crazier, with AI now starting to help us forecast these costs before they even happen.
So there you have it. We've laid out the tools, from sorting your fixed and variable costs to choosing the right method for your specific business. The concepts are clear and the technology is here to help. Your toolbox is now officially equipped. So, the only question left is, which cost, in your operation, are you going to tackle first?